I'm Russell Poynton from Edison Group. Today, I'm delighted to have Dr. Dominik Benner of the Platform Group. Dominik is the chairman of the board of directors and the CEO. Hello, Dominik.
Hi, Russell. How are you?
I'm good, thank you. Thanks for taking the time to be with us today. Dominik, why don't we start off with the Platform Group is a relatively new company to public markets. So would you talk about how the company's evolved, the services you provide, and your ambitions for the group, please?
So yeah, to be honest, Platform Group is a pretty old family business. My ancestors started with a brick and mortar business 140 years ago. And within the last 13 years, we just changed this company completely towards software and e-commerce platforms. And that was our strategic change, which was quite important for us, because starting from this point 13 years ago, we just developed toward a mid-sized platform group focusing on e-commerce and software activities, and that works pretty successful.
And what about the services you provide for your partners?
Mm-hmm. Well, when you compare us with a typical e-commerce company, it's quite different because we offer services and we make all the e-commerce activities for partners. So if you look for retailers or for manufacturers, usually 80% here in Europe, they do not have their own online store and they do not make real active e-commerce activities. And that is our job. That means we cover the full value chain for our partners, means we make all the photographies, we take care about the pricing, we make all the listings on our own online shops, we take care that all the logistics works in the proper way and that the customers are happy. We make the customer support and it ends up with the return logistics and all the sales services from our side. So we really cover the full value chain and not just offer just e-commerce or listing on an online platform or like this. Yeah.
Thanks, Dominik. And so could you just talk about what you think are the structural drivers for the Platform Group, and equally what you think are the potential challenges to growth going forward?
Well, I think the biggest and most important structural driver are the number of our partners. So if we have more partners, we can grow, and with more partners we get more products. And this is quite important for us because sometimes analysts ask me and say, okay, Mr. Benner, what do you think about the development of furniture industry or e-bike industry and so on? But we always respond to that the industry development is not very important for us. We really rely on the number of partners and their number of products. Because if we have more partners, we can directly increase the number of products. And with more products, we get more and more customers on our platforms. And this is the most important growth driver. Second driver of our growth is for sure the average price. So if the average price goes up, we have much better GMV and revenues. And third, it is quite important for us that we have good margins. That means that we always have the price authority from our partners, so we can decide what price we adjust and what price we're going to take in the market and to get our orders. And this is very important to understand that we are not a listing platform like eBay or so on, where the retailer decide what price is relevant and what price is good. We decide it for all our partners, and this price decision also determines our margin for our corporate business.
Thank you. And you've been very clear that in the future, half of your growth will come organically and half will come from M&A. So could you just talk a bit about how you approach M&A of platforms or websites? What are the financial characteristics you need in that, and the potential impacts on the company's financial leverage going forward?
Yeah, sure. So when you look back in the history of our company, we always acquired companies in the last years, and this has one special purpose. We developed a software by many years, and the software is a basis how we ramp up our platform business. So we really rely on the software, and we developed the software that we can enter easily into new industries. So when we say we want to enter the market for forest equipment, or for dentist equipment or so on. So we can use our software, implement it in this new industry, but we need a vehicle, which is relevant in the market, for example, for dentist equipment. And when we have this vehicle, we buy this company and implement our software there and ramp it up to a platform. That means we change the strategic path of this target and develop it towards a platform. And this is the way how we always do it. So this year we already acquired 4 companies. Last year we acquired 4 companies, and each year we have between 3 and 8 companies which are relevant for our growth. When you look on how we pay them, I think it's important to know that we have 3 different components. So one component is, of course, we pay the most acquisitions by cash, by our own equity. Second, in some cases, we also use some debt coming from our bank partners. And third, we have in 4 cases already used share payments. So the seller of the shares of the target, they are offered some shares in the TPG group, and they get a small portion on our whole group with that.
And with respect to the financial leverage, your target leverage going forward?
Yeah, we have a clear leverage level where we are in, and it is always between 1.5 and 2.3. This leverage guidance starts next year. So last year we have been around 2.6 EBITDA, and this year it will be less than 2.3 EBITDA. So I think we are on a pretty good level, and the response and the feedback from all the research institutes was quite positive on that.
Good, thank you. And my final question, going back to what we said earlier, you're a relatively new company to public markets. So could you just give us an overview of your financial results to date and your guidance for the next couple of years, please?
Well, we had a pretty successful year last year. So last year we achieved or overachieved all our goals, all our guidance goals for 2023. In total, we reached more than 440 million euro revenue and had 23 million EBITDA. And also our net profit was quite successful. We had a total net profit of around 33 million euro in total. And this year we are quite more optimistic compared to last year, because right now our track with M&A is successful. And we also see that there's a lot of customer confidence in our niche markets where we operate in. And therefore, we think that we will achieve 500 million euro total revenue this year, and will also grow until 30 million euro with the EBITDA this year. When you look on the EBITDA and when you look on our net profit, there's not such a big discrepancy. So we expect a net profit of at least 20 million euro or more. And we also had a very good first quarter, and the published numbers for this first quarter were over our own expectations.
And looking into 2025?
Well, in 2025, we already estimated our general guidance. We said that we will increase the revenue and increase our GMV. The GMV will be around 1.1 billion euro. So this is quite a big number for us. And also regarding our revenue, it will go up with the same proportion. And we will achieve 7% EBITDA margin. So this is a very high level for us. Because as a platform, you cannot achieve 20% margin with EBITDA. It's not possible. So, but 7% is higher compared to 5 point something in the last year. So I think we have a positive development, and all our cost structures are always pretty low. So we really take care that we do not have too much headquarter costs and not too much overhead here. And I think we are on a quite good track for achieving this goal next year.
Dominik, thank you very much for taking the time today to talk about the Platform Group.
Thank you, Russell.